Howdy, everybody. Welcome to Liberty Call. Today is Thursday, March 6th, 2025. Hope you're having a fantastical day out there in the interwebs. It's a pretty nice day here in Colorado after that snowstorm came through. It was nice yesterday. I apologize for not doing a show. Spent the afternoon with my wife. She had the day off. So got to do some fun stuff with her, shopping and lunch and stuff like that. So anyways, all right. Well, markets are getting hammered as trade tensions, weak economic data, and corporate earnings disappoints. Sending stocks tumbling. The Dow is down over 500 points. The S&P 500 dropped 1.8, and the Nasdaq is approaching correction territory, falling nearly 3%. Tech stocks are taking a beating, with Marvel down 18% and losses piling up for Nvidia and Palantir. Meanwhile, banking stocks are sliding. Job growth is slowing, and the Atlanta Fed just slashed its GDP forecast. So before we break everything down, if you could do me a favor, if you could give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All right, well, let's hop into the markets. All righty. Oh, that's not right. There it is. All righty. Dow Jones was down today, 0.99%, 427 points, improved a little bit. Closed at 42,578. S&P 500 down 1.78%, 104 points, closed at 57,38. NASDAQ down 2.61%, 483 points, closed at 18,069. The VIX was up 14.04% today. It's at 25,01. Canada down 1.15%. Brazil up 0.36%, and Mexico up 0.22%. In Europe, Germany was up 1.59%. The UK down 0.83%. France up 0.29%. Netherlands up 0.13%. Spain up 0.15%. Italy up 0.68%. Switzerland down 0.43%. And Portugal down 0.64%. Russian exchanges read today. MOEX down 1.79%. RTSI down 1.55%. And the overnight markets, the Nikkei was up 0.91%. Australia down 0.57%. New Zealand up 0.18%. In China, the Shanghai was up 1.17%. Shenzhen Component up 1.77%. China A50 up 1.12%. DJ Shanghai up 1.38%. Hang Seng up 3.29%. And the Taiwan weighted down 0.68% for the day. All right. So those are the markets. All right. Let's jump to our... why did it do that? Why did it do that? Oops. Close. Stop. There we are. Why did it do that? Okay. Add to screen. See, I don't want to do that. I want it to be like this. I need to fix this. Anyways, all right. Well, let's get to the market recap. S&P 500 falls sharply as tariff uncertainty weighs. And for those of you just listening, I've set my pictures on my screen were all wonky. They updated some settings here in my software, and looks like it added some things I didn't want to do. Anyways, all right. Well, the S&P 500 tumbled on Thursday as ongoing tariff uncertainty continued to rattle markets, keeping investors on edge just ahead of key employment data. Investors remained on the sidelines as conflicting trade policy signals from the Trump administration fueled volatility. President Trump announced a 1-month delay on 25% tariffs for Mexican imports that comply with the USMCA trade agreement, following a similar exemption for U.S. automakers. Reports suggest that Canada may receive a similar exemption, but uncertainty remains. The labor market provided a rare bright spot as jobless claims dropped 21,000 to 221,000 for the week ending March 1st, exceeding expectations. However, Philadelphia Fed President Patrick Harker warned of mounting consumer sector stress and inflation risk tied to rising raw material costs. The upcoming employment report will be closely watched for signs of labor market strength and Fed policy direction as fears of inflation mount. Retail and tech earnings drove individual stock moves. Macy's slipped 0.5% after issuing weak annual sales and profit forecast, citing cautious consumer spending. Marvel Technology plunged 17% as its AI-driven growth outlook failed to impress investors. Burlington stores surged 9% after strong Q4 earnings beat, despite warning of an uncertain 2025. And Wendy's, Frosties, dipped 0.3% after reaffirming full-year earnings guidance and long-term growth targets. With tariff concerns, inflation risks, and pivotal jobs reports ahead, investors remain cautious, keeping markets volatile. Awesome news. All right. Next up, let's get to some data here. Again, why does it keep doing that? All righty. This is the February ISM Non-Manufacturing Index report. Came out yesterday via First Trust. Mr. Nate Guernsey put it together. Righty. The ISM services report for February indicated continued expansion in the service sector, which drives 2/3 of the U.S. economy. The index rose to 53.5, exceeding expectations, and up from 52.8 in January, suggesting optimism amid political shifts. Employment growth was a major contributor, with the employment index rising to 53.9, its highest level since late 2021. However, employment growth was mixed across industries, with 7 sectors reporting increases while 7 saw declines. Notably, public administration and healthcare and social assistance reported job losses, potentially reflecting spending cuts from the Department of Government Efficiency. New orders and inflation pressures. New orders rose up to 52.2, while business activity remained stable at 54.4. Survey responses were filled with concerns over tariffs and their potential impact on business activity. The prices index surged to 62.6, with 16 of 18 industries paying higher prices, signaling continued inflationary pressures despite tight Fed policy. Other economic data: private payrolls rose 77,000 in February, well below the 140,000 expected, raising concerns about labor market weakness. Friday's non-farm payroll report is estimated to show 165,000 new jobs, with unemployment rate holding at around 4%. Auto sales climbed 3.2% month over month to an annual rate of 16 million, up from 2.1 a year ago. Despite service sector strength, tariffs and inflation remain key risks, while weak labor data suggest economic uncertainty ahead. All right, so that is everything there. Let's get to some more data here. We got there we are. Got the January international trade. This comes to us also via First Trust, and Mr. Strider Elas put this report together. Imports soared to an all-time high in January as businesses rushed to front run tariffs anticipated under the Trump administration. The spike was driven by industrial supplies, particularly finished metal shapes, which include materials used in automobiles, appliances, and manufacturing equipment. Notably, gold bars are categorized as finished metal shapes, contributing to the surge. Several countries saw their largest ever recorded increase in exports to the U.S. Switzerland plus 9.6 billion, mainly gold. Ireland plus 6.2 billion, and Australia plus 2.2 billion. So what's the impact of GDP and trade trends? The record-breaking import surge will significantly impact real GDP for Q1, as imports count as a negative in GDP calculations. This is expected to drag Q1 growth down by roughly 3 percentage points, leading to a projected 1.5% annualized GDP contraction. However, as firms wrap up tariff-driven purchases, a Q2 rebound is expected. Total trade volume is up 14.7% year over year, with exports rising 4.1% and imports surging 23.1%. The U.S. trade landscape is shifting, with Mexico now the top exporter to the U.S., displacing China to second place, while Canada is close behind. Other economic indicators: petroleum exports exceeded imports for the 32nd straight month, reinforcing the U.S. as a net exporter of petroleum products. Jobless claims fell 21,000 to 221,000, while continuing claims rose 42,000 to 1.897 million, suggesting steady but slow job growth in February. Despite short-term economic uncertainty, the longer-term trade shift and labor market resilience remains key factors to watch. Again, I would pay closest attention to consumer spending. That is probably going to be the one that is going to really give us, some sort of, view that the economy is slowing down. Then jobs will come next, and then kind of that vicious cycle that occurs. All right. Last up, we've got an article here from Zero Hedge. Treasury kills enforcement of beneficial ownership reporting. Small businesses rejoice. I'm quite happy about it too. So most of y'all probably out there who are W-2 employees probably have no idea what this is. So we'll talk a little bit about what it is and then what the administration did. All right. Beneficial ownership reporting is a regulation designed to combat money laundering and financial crimes by requiring businesses to disclose their true owners. Under the Corporate Transparency Act of 2019, businesses were required to file beneficial ownership information reports with the Financial Crimes Enforcement Network, listing the names, birth dates, addresses, and identification documents of all beneficial owners. More than 32 million businesses would have been affected, including small companies with no history of financial crime, like mine. On Sunday, the Treasury Department announced it would no longer enforce the rule limiting it only to foreign reporting companies. Treasury Secretary Scott Bessent called it a victory for common sense, emphasizing that it aligns with the Trump's agenda to cut burdensome regulations and stifle small businesses. I'd call it a Fourth Amendment infringement because, you have no right to dig into my business if there's never been a crime alleged. The decision came just a day after Elon Musk responded to an ex-user's plea to intervene, saying, I can't look into it. Or he said, I can't look into it. The rule had already faced legal challenges, with a federal judge issuing a nationwide injunction in December, citing concerns over its constitutionality. Corporate regulations has traditionally been a state matter. The BOI rule was widely criticized for being poorly publicized, exposing small business owners to penalties of up to $591 a day, $250,000 in fines, and 5 years in prison for noncompliance. Oh, that sounds like fun. The cost of compliance was estimated at $22.7 billion in the first year alone, with an ongoing burden of $5.6 billion annually. So what is the future of this? While Trump and Republicans celebrate the rollback, Democrats and transparency advocates condemned it. The Wall Street Journal noted that unless the CTA is repealed, the rule would return under a future administration. Opponents like the FACT Coalition have vowed legal challenges, calling it a move on unconstitutional subversion of Congress's intent. Again, it's none of their business. So as long as I'm not committing any crimes, they have no need to go digging around and know who owns my company or any company out there. What are they going to want to know next? Who are all the shareholders of every stock out there? It's ridiculous amount of data collection. And again, the same people who were crying about Elon's Doge monkeys going in and looking at everyone's private information, and that's in quotes. I don't trust the government. So, why would I feel any better about them digging around in this stuff? So anyways, all right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'd be happy to help. All right. Well, hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.